Hello and welcome to Mortgage Connection TV. I'm David Grossman. We are broadcasting here from Charlie Fitzwhiskey's in Vaughan on All Talk TV. Delighted to be here. I have with me today Ian McSevney. Welcome to the show, Ian.
Thank you.
Ian is from Altmore Mortgage Investment Corporation. Now, he's the founder and also the fund manager, and we're here to talk to Ian about his fund and about the great opportunities that mortgage investing holds for people who are, let's say, tired of the stock market, tired of having their money put into investments where they really don't know what's going on with it. You can't see it, you can't touch it, you just get these reports in the mail once a month, and sometimes you get reports that show you lost money, sometimes you made money. A number of years ago, people lost as much as 50% of their savings overnight in the stock market. It's kind of scary, especially when you see executives being taken off to jail from some of our most respected companies. But real estate is something that I love. I know Ian must love it too, because he is in the mortgage business, but it's even safer than real estate investing because you have a margin whereas if property values drop, as a mortgage holder, you're actually more safe than the owner. So that's what this show's about. Ian, glad to have you here today.
Thanks for having me.
My pleasure. So we're here to talk about this new fund that you've started, Altmore Mortgage Investment Corporation. Tell us about the fund. How did you decide to launch this fund?
Oh, I decided to launch Altmore because being in the mortgage industry as a broker over the years, I've always seen the opportunities that are available in private lending. You know, arranged a number of private mortgages over the years, and many of the investors in private mortgages have always seemed to fare out well and do well. As a broker, it also is a good opportunity for me to do additional deals to the traditional deals that a broker does, and it's also something that's, you know, it's good for the borrower that needs flexible lending solutions.
Right. So it made sense for you, and I should let our viewers know that you have a lifetime of experience in financial services. You have underwritten about $400 million worth of mortgages.
Correct.
So you know the fundamentals. Somebody comes to you to look for a mortgage, how to determine if it's a good loan opportunity or not. Can you give us maybe one or two of the top things that you look for to make that kind of assessment?
Okay, so to be clear, we are dealing sometimes with non-traditional sources here when we're lending from a MIC type vehicle, a mortgage investment corporation. So cash flow, which can be determined a number of ways. You know, typically you're going to look at a regular borrower's pay stub or their notice of assessment or their job letter from their employer. But a MIC would have to do a little bit more digging. We would have to assess their cash flow, look at their bank statements, their expenses in their business and things like that.
Okay, right, because if they just had a regular paycheck, they'd probably be talking to one of the banks and they wouldn't be talking to you. But
that's right.
There are a lot of people, they may be self-employed, maybe they're starting up a business, maybe they're going through a dry season, and their business is cyclical, and they may not get the help that they need at the bank.
Correct. And we could also be dealing with a borrower who maybe has reached the sort of ceiling limits at the banks. Like, for example, they're employed people, they have good credit, but they have an entrepreneurial side to them where they flip properties, they invest in rental properties and things like that, and they've reached the ceilings at the bank.
Right.
So now they need some help from a non-traditional lending source.
Right. And there are opportunities for strong borrowers, investors, to make money in real estate if they can get help from borrowers who have the insight to be able to evaluate a situation for what the opportunity. So now let's talk about the real estate itself. Where are you looking to lend money? Across Canada, just Ontario? What's your parameters?
For us, it would primarily be in the GTA, southwestern Ontario and southern Ontario, maybe to Niagara, Fort Erie, about as far as London, Kitchener, Waterloo, the GTA here, and Hamilton, Burlington, sort of Oakville corridor.
Okay, now maybe you can explain to me into why.
Why
is that? Why not Halifax, for example, at this point in time?
Well, Halifax is an area that we are considering down the road because there is going to be a bit of a boom there in demand for real estate because of the shipping contracts that are in place there. but some of the infrastructure there is still being built. It's going to take a bit of time before that comes into place. Some of the other areas are partly from a serviceability point of view. As a newer, small fund, we need to be able to visit those properties, knock on the door, meet with the borrowers, and view those properties.
So you don't have feet on the ground quite yet in Halifax. It's not, at least the market is not quite ready from your perspective.
Yeah, but we do have a person there, but the market is not quite there yet.
The market's not quite ready. So you're looking for areas that have a strong local economy.
Yeah.
There are some other parameters as well with respect to a minimum population.
25,000 typically. You're not going to see us lending in somewhere that's an hour outside of the city or a city, and you know they're well and septic and things like that. There may be some exceptions there if it's a low loan to value position, and other variables come into play, such as the quality of the borrower and things like that. But we want marketable real estate that is in an active market where property can be listed and sold if we ever had to come to that position. Okay,
so you want good marketable real estate that is near to where you and the fund managers are located, so you can always jump in the car.
That's right.
Not more than an hour or something to go have a look, see that there's
reasonable
somebody there.
Commutable distance.
The house is still there. The house is still standing.
Correct.
You know that the investment is safe.
Correct.
All right. Very good. Now, what about returns? What kind of investment, first of all, are you looking for, and what kind of rate of return?
We're looking at a minimum investment of about $25,000. And we're looking at a target rate of return of about 10.25%.
Okay.
So it's we're pushing to be able to meet the double-digit return that a lot of people are craving, used to get in their mutual funds, aren't getting now. And one of the interesting things about a mortgage investment corporation is your shares are not volatile. They're not tied to the stock market. They don't go up and down like the stock market does.
Right.
And there's the underlying real estate to collateralize the debt. So you're well positioned. And on top of those two factors, one of the other factors that is a really strong point that we have is you have the covenants of the borrower as well. So if you ever did have to foreclose on a property and there was a small shortfall left, you've also been provided with that person's guarantee and covenant, and they can be garnished and things like that to recoup any other losses. I mean, you can't go to your mutual fund manager and ask him to pay up if your mutual funds go down. So.
Yeah, that's not likely to happen. No, he's more likely to be gone off the face of the earth.
Yeah.
But now 10+% return is very high. I mean, it's exciting in a way to think, wow, can I actually make that much money? And by the way, the investment is RRSP eligible.
Yes, it is. Yeah, RRSP, RIF, and RESP.
Which is huge, right? Because I mean, if you're earning interest and it's inside an RRSP, or RESP,
basically any registered funds,
then you have further tax advantages.
Yes, you do. Yeah.
So some people probably have money inside of a mutual fund, and they're getting their statements, and they look at them, and they're just kind of, like maybe rolling their eyes when they come in, wondering what's happening. There's an opportunity for them to get some good returns with some good investment that they can literally see. Like, will people know, for example, what the actual addresses are of the holdings?
Yeah, in some of the reports they would see that stuff, but they're buying shares in the corporation, so they're not getting an individually registered interest on a specific property. There are other opportunities to invest directly into mortgages, but then you're taking on the whole kit and caboodle, I guess you could say yourself. You have to.
What do you mean by that?
You'd have to weather the storm of an interruption in the cash flow.
Okay, right. So there's no diversification.
No.
So which is one of the advantages of having, let's say, a lot of small second mortgages.
Yeah.
Because you have, if one maybe goes back, and we should let people know that just because if it does go into arrears, doesn't mean it's the end of the world, right? Because most of the time the person has a cash flow problem, if it happens, the equity is still there. The people will get their money, and they may get penalties.
That's right. It's just going to be
NSF checks on top of that.
There's going to be a bit of a process to go through to realize that, but it would only be, you know, for example, if you had 1,000 mortgages in there and you had 1,000 investors, you're only 1,000th of that affecting your individual investment. So it shouldn't be a major disruption to distribution of dividends.
Well, plus I think a full legal outing is not always necessary, right? Like if people are into trouble, they may either take their own steps to refinance, or maybe sell the house, you know, and then everyone gets paid on at the time of sale.
And being brokers rather than just the fund managers ourselves, you know, we can work with that client, and perhaps maybe there could be a refinance issue. We could package up their mortgage, and potentially, even if we had to sell that at a discount to get it out of the portfolio, that could also be done as well. Right. So offering a flexible solution, just like we do at the front end, we would obviously be open to that during the process to make sure that you know, there's no loss incurred. Right. Okay. Very good. So, I mean, listen, people, you have Ian McSevney at the helm of Altmore Mortgage Investment Corporation. He knows his stuff. He's been in financial services his entire life. He's brokered. He's also the principal broker, the broker of record at a company called Mortgage Advisors, and he's going to do a great job. And I know that, and that's why I've invited him here on Mortgage Connection TV. And as you may know, I am also a mortgage agent, and if you would like more information to invest in Altmore Mortgage Investment Corporation, if you have questions or if you're ready to take the plunge, give me a call at 416-876-2031, and I'll get you all the information you need, and we'll make it happen, and we're going to make you lots of money. And Ian and I have also been in talks about possibly making me a director of the fund, because I love what he's doing. I think he's very bright, has a lot of vision, and I believe in this business, and I believe in the opportunities for people to invest, get good returns on safe investments, and that's what it's all about. So give me a call. I want to hear from you. Ian, thank you so much for being here today. Thanks very much. I really appreciate it, and hopefully we'll have you back again very soon. Great, thank you.
Look forward to hearing from you. Have a good day.